Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Thursday, June 6th, 2013. Well, a continuation of the trend to the downside today, and the candle that's made a lower high and a lower low. Previous day's trading, we saw that establishment of that first time frame downtrend with a very large black bodied candle, and a candle where the sellers had taken very strong control. And for the previous day's trading, I suggested that there was a good possibility of the trend continuing down with the sellers being in control of the market, but that we needed to watch the potential for the round number 1600 level that was previous resistance. We had to watch that for its potential to turn into support, and that's exactly what we're seeing today with today's trading. The market tested down to and just below that level, and we see this large shadow on the bottom of the candle highlighting the upside price rejection that we saw when the market interacted with that level, and it signified the sellers losing commitment down around that area and the buyers coming back into the market. We have also seen the buyers close with control of this market, and very strong control, and they've shown some very strong commitment to taking this market higher, even though we haven't seen the trend change. Also, a white bodied candle signifies that the buyers have made a significant amount of net bullish progress on the day between the open and the close, as opposed to the sellers making some net progress throughout the trading day for the previous day. It does suggest that there is good potential for this market to change trend to the upside, so we do need to watch the high of the current candle. In terms of candlesticks as well, this is also a potential reversal pattern. Here we have the prior downtrend in force, and we have a harami pattern, and that's where we have a prior downtrend, a black body and a white body today, and the body of today's candle is within the body of the previous candle. And this does suggest that there is good potential for a change of trend. One problem may be, however, that if we look at these two candles here that was very close by, we saw the market find support down around that level, even though it was broken for yesterday's trading. And if we look at where the market traded to and closed at today, the high and the close was just at the bottom of that area of previous support, and that has potential to hold as resistance, and it will be crucial to this market moving forward for tomorrow's trading. By the same token, the 1600 round number level has potential to hold as strong support for this market as well. So we have a market that has potentially strong resistance overhead, but potentially strong support down below. So certainly a market that we do need to wait and be patient and watch how this market develops in relation to those two areas of support and resistance. Now, if the market does trade higher above that that resistance, around the 1623 level, we do also have the Kijun-sen and the Tenkan-sen trading within the same zone around the 1634 to 1636 level, and that has potential to be very strong resistance for this market, and that coincides with this minor swing low here. So a very, very solid potential resistance just above the area of these two candles around 1623. So certainly, even though the buyers have taken control of this market for today's trading, it certainly does look as though there is potential for them to face some very strong opposition to trading this market higher. Now, in terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market was trending down, and here today we saw the market once again test to and below the 100% level and be rejected from there, with a day where the buyers won control. So it really does suggest very good potential for that change of trend, so we will be looking for a potential higher high and higher low. And also, in terms of the Fibonacci retracement, we're in expansive mode of that. We were watching the 161.8% level. Price action traded down below there, closed above there, being rejected from there on a bullish candle, suggesting good potential for a change of trend back to the upside. Now, in terms of patterns, and here we saw the prior breakout below this symmetrical triangle. We had a first time frame and second time frame uptrend in place, the congestion with the peaks and troughs converging, the breakout and the close down below the bottom barrier, the market reacting and testing back up to the barrier and being rejected from there. And we haven't seen the market reach its target, but the target was just down below the 1600 round number level of support, and it certainly doesn't look as though the market will reach its target. There is a possibility. The trend hasn't technically changed, But with the buyers being in control for today's trading, there is a possibility the market will trade higher. So if we did trade that target, we could potentially think about taking some profits here with buyers coming back into this market, and the scenario could be that the market may rally into this zone of resistance and then potentially sell off again, and it may set the market up for a test down below the 1600 level. But really what we should be doing is reacting to how the market trades for tomorrow's trading. So we do need to watch the high of the current candle, but also down around the 1600 level and around the lows. In terms of Ichimoku, some mixed signals at the moment. We have a bullish market in a long-term time frame, so a market that is trading up and has a long-term trend by trading up above the cloud, but a bearish market in the medium and fast-term time frames by trading down below the Kijun-sen, and the market is in a second time frame downtrend, and we can see a series of lower peaks and lower troughs in this market that determines the trend in the second time frame, but also in a first time frame downtrend with the market making a lower high and a lower low. But as I've already mentioned, there is potential for a change of trend back to the upside. A test up to around the 1635 up to 1636 level around the Kijun-sen and Tenkan-sen is on the cards. If we do have a bullish breakout up above that area with a bullish candle and a bullish close up above there, we could see the market testing up to the top of this zone of previous support up around 1650, and then perhaps even a test to higher levels. But we do need to watch how the market reacts to the 1600 level of support, but also the high of the current candle and the zone extending further above there.